The first quarter results for 2025 are out, and they look pretty strong.
They really do. Revenue hit $10.54 billion.
Wow, okay. And how does that compare to last year?
That's a 13% increase year over year, so solid growth there.
13%. And operating income, I heard that was up significantly too.
Yeah, even more so, actually. It rose 27% compared to last year, reaching $3.3 billion.
27%. That definitely impacts the margin.
Exactly. The operating margin landed at 32% for the quarter.
32, up from what, 28% in Q1 2024?
That's right, a 4-point jump. And, these numbers beat Wall Street expectations pretty clearly.
Right, the forecast was, what, around $10.51 billion for revenue?
Yeah, and they came in a bit higher. And earnings per share, the EPS, was also well above predictions.
$6.61 actual versus $5.71 expected.
Precisely. So a strong beat on both top and bottom lines.
Good stuff. And by the way, if you're finding this sort of breakdown useful, do take a moment to like and subscribe. It helps us keep bringing you these analyses.
Definitely. Okay, so looking forward.
Yeah, what's the outlook? Did they update the full year guidance?
They actually reaffirmed it. Still looking at $43.5 billion to $44.5 billion for the full year 2025.
Okay, holding steady on the full year. And for Q2?
For the second quarter, they're expecting revenue to grow about 15%.
15% growth in Q2. And margin?
Targeting an operating margin of 33% for Q2.
33%. Even higher than Q1.
And the projected EPS for Q2 is $7.03.
Which is, again, ahead of what analysts were expecting, right? I think the consensus was around $6.24.
That's correct. So the guidance suggests continued momentum into the next quarter.
Makes sense. So what were the key things driving that Q1 revenue growth?
Well, it seems to be a combination of two main factors, increases in membership numbers.
More subscribers, okay.
And the impact of higher pricing in certain markets, those price adjustments they've been making.
Right. Let's break that down regionally. How did the U.S. and Canada perform?
UKN brought in $4.617 billion. That's a 9% growth. Okay, 9%. Pretty solid. What about EMEA, Europe, Middle East, Africa?
EMEA showed stronger growth, actually. $3.45 billion in revenue, which is up 15% year over year.
15%. Nice. And Asia Pacific, often a high growth area.
And it certainly was this quarter. APAC saw really significant growth, 23%.
23%. Wow. What was the revenue number there?
$1.259 billion. So fastest growing region by far.
Impressive. And Latin America?
Latin America contributed $1.262 billion, which represents an 8% increase. Still growing, just a bit slower than the others this quarter.
Got it. So growth across the board, but particularly strong in EMEA and APAC.
Exactly. And a lot of that is likely fueled by the content slate.
Let's talk about that. What were the big hits in Q1?
Well, Adolescence was huge. It became their third most popular English language series ever.
Third most popular ever. How many views?
124 million views. Just massive engagement.
Incredible. Any big films?
Yeah. Back in Action also did really well. It ranked as the 6th most popular English language film they've ever had. 6th ever. Okay. Views on that?
146 million views for Back in Action.
Wow. Even higher than Adolescence? And non-English content. Still a major focus, I assume.
Absolutely. Ad Vitam from France was the 6th most popular non-English film, pulling in 63 million views.
63 million from France. Nice. Any others?
And Counterattack from Mexico was the 10th most popular non-English film with 59 million views.
So strong performance from international originals, too.
Definitely. And it wasn't just those headliners. They highlighted a whole range of content across genres.
Like what?
Well, in Action, The Night Agent Season 2 got 50 million views.
Okay.
Comedy had Running Point with 36 million. And an Argentinian show, Envy Season 2, got 9 million.
True crime is usually popular, too.
It was. American Murder, Gabby Petito drew 52 million views.
52 million. Strong numbers. What about specific languages?
Yeah, they called out German content like Cassandra with 36 million views.
Yeah.
Portuguese series Centonia Season 5 got 9 million.
And Korean content always seems to do well.
It did again. The Trauma Code. Heroes on Call had 31 million views, and When Life Gives You Tangerines got 23 million.
Lots of variety. Swedish, anime.
Yep. The Oren Murders from Sweden reached 29 million views. Anime hit Sakamoto Days had 21 million.
Even animation and documentary.
The Animated Plankton, the movie got 40 million views.
Yeah.
And the documentary Gone Girls, the Long Island serial killer, had 17 million.
It's amazing the breadth. They even mentioned kids content.
Yeah. Miss Rachel for Toddlers pulled in 29 million views.
29 million. And reality TV.
Inside S2, featuring The Sidemen, got 2 million views, and Love's Blind Season 8 reached 12 million.
So really a wide range driving engagement. It wasn't just one or two breakout hits.
Exactly. It seems like the strategy of having something for everyone across genres and languages is paying off.
Okay, shifting gears a bit. What about the live event strategy? That's relatively new for them.
Right. They mentioned the launch of WWE Raw has been really successful.
How How so?
It's been consistently ranking in their global top 10 lists since launch.
Okay, so grabbing eyeballs. Any other live events planned?
Yes. They announced the Taylor vs. Serrano 3 boxing rematch is set for July 11th this year.
Ah, another big boxing event.
And they've also opted into a second NFL game for Christmas Day 2025.
2 NFL games on Christmas Day. That's a bigger push into live sports.
Seems like it. Plus, they highlighted becoming the exclusive home for WWE in India since April 1st.
Exclusively in India.
Yeah, with live streams and, importantly, Hindi commentary available year-round.
Interesting move for the Indian market. Okay, let's talk monetization beyond just subscriptions. How are the price adjustments landing?
They said the recent ones in the US, UK, and Argentina are performing pretty much as expected.
So no major backlash or unexpected churn.
They really not. And they also implemented a price adjustment in France, which they noted was already baked into their 2025 guidance.
Got it. And the advertising business, how's that progressing?
They're aiming to get it to sufficient scale in all the countries where they offer ads during 2025.
Sufficient scale. What does that mean in practice? More inventory, more advertisers?
Probably both. They want it to be a more meaningful contributor, and they expect continued growth there.
Any tech developments on the ad side?
Yes, a big one. They successfully launched their own in-house ad tech platform, the Netflix Ads Suite, in the US on April 1st.
In-house platform. That gives them more control, I imagine.
Exactly. And the plan is to roll that out in the remaining ad markets soon.
And programmatic advertising.
They introduced that in EMEA this quarter, so it's now available in UCAN, EMEA, and LATAM.
Okay. Asia Pacific next.
Yep. APAC launch for programmatic is expected in Q2, so expanding the ways advertisers can buy ads on the platform.
Makes sense. All right, let's look at the financials again, specifically cash flow and the balance sheet.
Sure. Net cash from operating activities was strong in Q1, $2.79 billion.
How does that compare year over year?
That's up 26%, so generating significantly more cash from the core business.
And free cash flow.
Also very healthy, $2.66 billion for the quarter.
Which is up.
Up 25% compared to Q1 last year.
Solid cash generation. Does that change their full year free cash flow forecast?
No, they reaffirm that as well. Still forecasting approximately $8 billion in free cash flow for the full year 2025.
$8 billion. Okay. What are they doing with all that cash? Share buybacks.
Definitely. They repurchased 3.7 million shares in Q1 alone.
For how much?
For $3.5 billion. They noted that's the largest amount they've ever spent on share repurchases in a single quarter.
$3.5 billion in one quarter. Wow. How much authorization do they have left?
As of the end of Q1, they still had $13.6 billion remaining under the current share repurchase authorization.
So plenty of room to continue buybacks if they choose. What about debt?
Gross debt stood at $15.1 billion at the end of the quarter.
And cash on hand?
$7.2 billion in cash and cash equivalents.
Okay. Any plans for managing that debt?
Yes. They mentioned plans to pay down $1 billion of debt that's maturing in Q2.
Using cash on hand or?
Using proceeds from a bond deal they did back in 2024, earmarked for this.
Got it. So managing the balance sheet actively. Any other sort of corporate updates, governance changes?
Couple of notes there. Reed Hastings has now transitioned fully to chairman of the board, but as a non-executive director.
Okay, so still involved, but not in day-to-day executive decisions.
Correct. And also, Tim Haley, another board member, will not be standing for re-election.
All right, let's touch on the UK market specifically. They often highlight performance there.
They did. According to Barb data, their share of UK TV time reached 9.0% in Q1 2025.
9% of all TV viewing time in the UK. That's significant.
It really is. And they tied that into their investment in the UK creative community, noting they've invested over $6 billion there since 2020.
And didn't one of their shows hit a milestone in the UK recently?
Yes, Adolescence, which we talked about earlier, became the first ever streaming show to top the UK's official weekly TV ratings chart.
First ever streaming show to beat all the traditional broadcast channels for a week.
That's what they highlighted. A pretty big symbolic win for streaming in general, and for them specifically.
Definitely shows their growing influence. And they're producing everywhere now, right?
Pretty much.
Oh,
They mentioned they're now producing content in over 50 countries.
50 countries. Truly a global production house.
Mm-hmm.
Okay, so let's recap the outlook again quickly. Q2 revenue growth expected at
15%. Driven, they say, by those price increases filtering through, plus continued growth in membership, and importantly, advertising income chipping in more.
Right, ads becoming a more noticeable driver. And the full year forecast remains $43.5 to $44.5 billion revenue.
Correct, with a target operating margin for the full year of 29%.
29% margin for the year, and that huge share buyback in Q1.
Yeah, 3.7 million shares for $3.5 billion, the largest ever in a quarter. Worth repeating, because it shows their confidence and focus on returning capital.
Absolutely. And briefly, the stock price has been performing well. Any thoughts on where it might head?
Well, based on the pre-market reaction to these results, if the current current uptrend holds, some analysts think the stock could open around the $1,020 per share mark.
Getting closer to its all-time high.
Yeah, the historical high is around $1,050, so it's definitely testing those upper levels again after this report.
Interesting times for the stock. So wrapping things up, it sounds like a very strong start to 2025.
Yeah, I think that's fair. Strong growth in revenue and operating income, beating expectations, solid performance across regions and content.
And a positive outlook for Q2 and the rest of the year, supported by multiple drivers, membership pricing, and the growing ads business.
Exactly. Plus, significant cash generation allowing for massive share buybacks. It seems like their strategic adjustments over the last couple of years are really bearing fruit now.
A solid report all around.
It certainly looks that way. Of course, the entertainment landscape is always evolving, always competitive.
True. It'll be interesting to see how they continue to navigate that, especially with the push into live events and scaling the ad business. It's not just about subscriber growth anymore.
Not at all. It's about maximizing revenue per member and building multiple robust income streams. That seems to be the clear focus now.
Well, thank you for walking through all those numbers and details.
My pleasure.
And thank you all for joining us for this exploration. If you found value in this discussion, please do hit that like button and subscribe for more analyses like this one.
We aim to keep tracking these developments and bringing you the insights.
Indeed. We'll be back soon with more on the ever-changing world of media and entertainment. Goodbye for now.
Bye, everyone.